India's fuel retailers are likely to report subdued refining and marketing businesses in the December quarter. But the blow may be softened by inventory gains and healthy consumption. Soumeet Sarkar is standing by with an estimate of how they might have performed in the quarter three. Soumeet, good morning.
Good morning. So the state-owned oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, are likely to report a muted quarter sequentially due to subdued refining and marketing margin. However, some of these negatives could be offset by an inventory gain and good growth that we had seen in the fuel consumption in the first 2 months of the third quarter of financial year 2020. Now, Brent crude, that is the Asian benchmark for oil. Now, though it averaged marginally higher during the quarter at around $62.4 per barrel, it was continuously rising throughout the quarter. During the Q3 of FY20, it rose nearly 9% on the back of the production cuts announced by the OPEC. Now, generally, there is a direct correlation between fuel oil prices and inventory gain or losses. If the fuel oil prices average higher compared to last quarter, there is an inventory gain, and if they average lower, there is an inventory loss. As you can see, in the March 2018 quarter, fuel prices averaged at $75 per barrel as compared to $67.2 per barrel, and all the three oil marketing companies had reported an inventory gain of close to 12,500 crore rupees. Similarly, in the March 2017 quarter, fuel prices averaged lower at $50.8 per barrel as compared to $55 per barrel in the previous quarter, and all the three oil marketing companies had reported an inventory loss of 6,244 crore rupees. Now, though in this quarter crude prices are averaging only marginally higher, the chances of a higher inventory gain is possible, and that's because of the 9% gain that we had seen throughout the quarter when it comes to crude prices. Now, moving on to refining side, the Singapore gross refining margin, that is the Asian benchmark, now that averaged at $1.7 per barrel, a drop of nearly 74% compared to last quarter. Now, this $1.7 per barrel is the lowest in at least the last 8 years. Now, lower gross refining margin means that the company will earn lower from converting every barrel of crude into fuel. Now, this drop in gross refining margin was mainly due to the plunge in fuel oil margins and a subdued margins for other products like diesel, which was on the back of slowdown and well-supplied global market. However, the impact of this lower gross refining margin would be lower on the Indian oil refiners, and that is because the fuel oil production for Indian oil refiners ranges from 3 to 7% for the total production. However, the overall weakness that we had seen in the margins of other products could weigh on the Indian oil refiners in the third quarter of financial year 2020. Now, unlike the last quarter, in the December ended quarter, the petrol and diesel prices moved up much lower compared to the Brent crude prices. Now, as I mentioned earlier, that the Brent crude was up nearly 9% throughout the quarter. Petrol and diesel prices moved up only 1% during that period, and that's the reason, as you can see here, the marketing margin that they earn from selling every liter of petrol and diesel, that averaged lower at 3.1 rupees per liter and 2.7 rupees per liter. Now, this will definitely impact the marketing business of all the three oil marketing companies, but more it will impact HPCL and BPCL because the marketing segment contributes more to its EBITDA. Now, lastly, the consumption of fuel in the first 2 months of third quarter of financial 2018, that averaged higher compared to the previous quarter. Now, previous quarter was marked by slowdown, but in the October and November 2019 month, the fuel consumption has picked up, and mainly in the month of November, as you can see, it grew nearly 11% compared to last year. And as you can see, in the earlier quarter, the second quarter, it averaged at around 17 to 16,000, but in this quarter, it has averaged at around 17,500 to nearly 19,000 million tons. So this is a positive factor that has come in for the oil marketing companies, and this growth was led by a more sale of retail fuels like petrol and diesel and LPG. So this could be the one positive factor for the oil marketing companies in the third quarter of financial year 2020.